Hey, what's going on, guys? Welcome back to the Real Estate Playbook. My name's Andrew, and today we're going to jump straight into the topic of closing costs. Because on average, when you're buying a home with a mortgage, you're going to spend anywhere between 2 and 5% per the loan amount on closing costs. And just for starters, closing costs are all the fees associated with getting your mortgage in addition to the down payment, right? So you have your down payment, and then you also have your closing costs. And if you want to add those together, that's what people call your total cash to close. That's the total amount of funds you need to have when you're going to buy your home, right? So you got down payment, we got closing costs. And today I'm going to break down the three main buckets that go into your closing cost. So the first main bucket that goes into your closing costs are the bank fees. Now, these are the fees that the lending company is charging to do your loan. So you may have a processing fee. You may have an underwriting fee. You may have a closing fee. If you're purchasing the rate down lower than what the just current market rate is, you're going to have origination points for that. Or maybe the lending company just charges a base rate in terms of origination points to originate your loan. Maybe they charge 2% of the loan amount to do your loan. That could be how they do it. Otherwise, some different companies will break it down in terms of a flat fee with, X amount of money for processing, underwriting, closing, etc. So it's probably either going to be a flat fee or just a percentage of the loan amount for them to do your loan. But that's how it's going to break down when you're paying the actual lender to do your loan. So the second main bucket of closing costs is what's called your third-party fees. Now, your third-party fees are additional fees you have to pay to get your loan, but these are fees separate from the bank. So when you're comparing, apples to apples in terms of which lender to go to and different pricing, these are fees right here that are not correlated with that bank. So this is what the bank is charging, and then this is what the outside people are charging. So some of your third-party fees would be an appraisal, right? You have to go get your home appraised to figure out what the value is, and ensuring that the lending company is loaning an amount that is equivalent to what it comes in at value for. So that would be an appraisal, right? You got your credit report, you've got your title insurance, making sure that when you buy your home, the current mortgage you're getting is the only lien on the home. There's a clean title and there's no past loans in there, right? That'd be a really bad day if you bought a home with additional titles. Do not want that. Flood insurance, right? If you're in a flood zone, possibly upfront mortgage insurance if you're choosing to pay for it that way, if it's applicable to you, right? There's something called a single premium mortgage insurance policy, which is basically when you're paying for your entire mortgage insurance up front. So that may be something you're doing if it's applicable to you. That would be in your third-party fees. And then lastly, your third main bucket of closing cost expenses would be your prepaid expenses. Now, you've got things like property taxes and homeowners insurance that usually lenders are going to collect up front, and then they're going to pay those for you when they're due. So, for example, they may collect, 12 months up front of your homeowners insurance, right? They may collect 12 months up front for your property taxes. It just depends when you're at or where you're at in the year in terms of when your property taxes are due. But basically, the bank is going to collect these expenses up front so that when they're due, they already have them to pay them in advance. And basically what this does is this lowers the likelihood of an individual defaulting on their loan because those additional expenses outside of your principal and interest payment have already been collected. You're also going to have your initial escrow deposit, right? And basically your escrow deposit is basically money that you're preloading in your escrow account, which is essentially like a savings account for your house, to have money in there in the situation where your prepaid homeowners insurance and property taxes change, right? So if those amounts change, if they go up, you don't have to go find money in your, whatever savings vehicle you have. You already have it saved in your escrow account to help with that fluctuation. So you're going to have an initial escrow deposit. And then also you're going to have prepaid interest depending on when you close on your home. So if you close earlier in the month, you're going to pay interest on from whenever you close through the rest of the month. So earlier in the month, that amount's going to be a lot larger. Whereas if you close, in the back half of the month, you're paying a less time because say you're closing on the 28th, you're only going to pay, interest from the 28th through the rest of the month. Whereas if you close earlier in the month, say in the first or the second, you would pay interest from that day all the way through the rest of the month because you're prepaying for that because when you're buying the home. So as you can see, guys, it's pretty straightforward here. There's really just three main buckets that your closing costs are going to fall into. And I just want to take some time today to go through them and help educate you on what these are. Because usually when I'm talking to first-time home buyers, some of them are under the impression that you're only paying for your down payment, which unfortunately is not the case because you have all these other fees to, pay to have your loan done. So just want to let you know, just so when you're saving and preparing for your home purchase, you have money set aside not only for your down payment, but also to cover these closing costs, right? So hopefully this brought value to you. If you have any questions, feel free to drop those down in the chat or email those to yourrealestateplaybook@gmail.com, and I'm happy to get back to you and help answer those questions. So thank you so much. I'll see you next time.